Hey everybody, Stephen Ho here with the Mississauga real estate team, and this is your February real estate market update. Now yesterday we had huge news. Well, we all kind of expected it to come. The Bank of Canada has increased the interest rate from 0.25 to 0.5%. Now what does this all mean? Now this increase isn't specifically just for real estate market, because this is to battle the inflation that we're all experiencing. We're seeing it at the pumps, we're feeling it at the grocery store. Everything has gone up and the government needs to get a hold on it. Now, what does this mean for you? The real estate market has been on a tear for the last few months, actually for the last year or so, since the pandemic. And everyone has changed their lifestyle preferences and need a little bit more space. Housing needs have come to the forefront for many, many people. In the month of February, sales are down, listings are down, but price is still up almost 30% from year over year. At 27%, there's still a huge demand. Even though the numbers are relatively less than last year in terms of sales and listings, the demand of it with supply and demand has really pushed the price up. And with how the market is going right now, we are seeing a shift in the market in the last couple of weeks. A lot of buyers are getting a little tired of all the competition, and a lot of people are waiting to see what happened with the interest rate announcements. And now that it's out, we're going to see a shift in the market. Now, what does that actually mean is yet to be seen. It's going to take a couple weeks, maybe a couple of months for it to really show up in the sales in real estate, because a lot of people that are active in the market have already got their pre-approval, which is good for usually 90 to 120 days. So that's going to take some time to really filter into the market. Now, if you're looking at the different sub-segments, you can check out the stats in our other posts. But ultimately, what we're seeing, and we've been kind of talking about this over the last year or so, is that the condo market is going to be coming up. And yes, it has. It's kind of come back with a vengeance. And that as that gap between freehold and condos grew over the time of the last year or so, now there's opportunity and people are noticing it, and condo prices have come up. So as we go into the future, we're going to see a lot of changes. Now, with housing prices going up as much as they have, people are also refinancing using the equity that has appeared over the last couple of years to buy investment properties, because ultimately at the rate that we're going, people are thinking about helping their kids from now. And this is something that you might want to talk to your mortgage person about, refinancing, so that you can leverage the equity that you have built up with the rising market that we've seen in the past 2 years. So the story is pretty much more or less the same. There's not enough houses for the demand that we have. If unemployment skyrockets, if interest rates skyrockets, people that don't have access to money or they don't have jobs anymore, then that's really what's going to affect the market to come down. Even though interest rates have gone up by a quarter point, historically speaking, this is still very, very low. So people still have access to affordable financing. And ultimately, that's still going to drive the market forward. Now, if you want to know what kind of opportunities that you have in your situation, feel free to reach out to us. We're here to help. We'd love to talk. And until then, we'll see you next time.